see all the inefficiency here. All this buy side here. The price is reaching down to offer price into this buy side imbalance, sell side inefficiency. Well, I guess we'll see it deliver to a profitable exit on this one too. ES has the same thing here. Not losing, so it might as well turn into better than 5 to 1. Small little balance right there. If you're paying attention, what the price is doing, this is actually my market maker sell model. So it can go down to here, which is also inside of this inefficiency. Well, it's not inside of it, but it also can go to this depth of. Take these off for a second. So see a little inefficiency right there. So we're going to actually put it right on the high of that fair value gap right there. And the sell side residing right below that. So it should accelerate lower here and go after the sell side right below here. So this is the original consolidation. Runs up, reaccumulation, smart money reversal, low risk sell, redistribution, second stage distribution, acceleration, attack the original consolidation with sell side reside that low right there. There's several factors between this low and that efficiency right there. It could go a little bit more than that too, depending on how overzealous it gets going into the close. But it's not enough for me to want to do anything with it. I was actually trying to take a losing trade. I sold short in here and added to it here because I already knew I was going to win the trade, so I might as well just make the best of it, right? Don't waste a good opportunity. So we'll take 3 off here. I'll take 1 off right under here. And 1 just underneath there. And the final will be the target here. First partial taken, right underneath this low, then this low, and then that small little gap right there. Here's another partial. And we'll keep it around $500 on the balance, just in case good old ICT gets it wrong. These next 2 might fill pretty quick. My stop is rolled, in case you're wondering. And so you were just thinking it. Why did I roll my stop there? It's just above mean threshold of that last up close candle. So if it does roll back on me and stops me, I'm okay with it. But if it wants to keep going lower, then obviously that's a favorable location for a trail stop. The logic would be, even if it has a lower retracement up into this inefficiency here and bumps the bottom of this old buy side imbalance, sell side inefficiency, that's completely permissible. Just to prove the theory, I'm going to add 1 contract if it bumps the bottom end of that buy side imbalance, sell side inefficiency. Could run lower from here. It's already done its delivery to the high end of that fair value gap right there. Watch those wicks right here. Consequent encroachment of those wicks. I'd like to see that be a barrier, if anything, on the upside starts to materialize. Told you, take that entry. So you can see that 15,289 in the quarter level. That's an actual low right there. So right before all this run up, the stop loss orders are sitting right below that. What kind of stop loss? Sell stops. Why would that be advantageous for price to deliver there? From up here, here, on here, here, that would be counterparty to buy at a lower price from sellers that want to sell at a low price, right below that low. And in one fell swoop, they could take that liquidity and reach into this inefficiency and order block and complete the numbers for today. I don't trust those dojis. This is promoting the idea that this is going to turn and go higher. That's not the case. The market's going to eat right over top of this, run right over top of it, and go right into this area here. You might want to kiss the bottom of that buy side and balance, sell side inefficiency once more. I would have favored not doing that again, but it's okay. We're leading into the last hour of New York PM session. That begins at 3 o'clock. And so we're about 5 minutes or so, or less than 5 minutes for that to begin. All of this drop from here to here is nicely delivered, efficient. The inefficiency here was repriced to all of this back and forth price action, then down. We had an inefficiency here. We've been in there multiple times. We've hit the bottom of the buy side and balance sell side inefficiency. So it's all green light for it to go lower and pair up that sell side liquidity, deliver inefficiency over here to efficient right in here. I'm not saying that's the lowest of the day, but that's all I'm looking for. So inside of all this fractal, that's what I'm looking for the completion of that run. Being Friday, non-farm Friday, non-farm payroll Friday. I hammered this today. I beat it up pretty bad. Just see. Executions. And I'll change the chart so you can see it's not market replay or anything like that. The question I like to always ask is internal dialogue. Like if I was long and I had my stop loss below that low, would I feel safe right now? And I wouldn't. And they should be trembling right now too. They're not going to give them a chance to get off of it now. Quickly surge for it. Notice the time. 3 o'clock. Where's the liquidity? Below 15,289 and a quarter. And what's below that? An inefficiency. So now I don't want to see it come back up to the bottom of that old buy side balance, sell side inefficiency right here. I don't want to see that bump it again. So it either goes to my limit order or limit orders, or it stops me out there and I'm content with that. My stop's sitting right above those really smooth highs. You could still knock those out and then come down and go to my target. It's okay. I've already smashed it today pretty good. It's really nice being in a position where being right is not the end result of choice. It's just you're in a position now where if it goes to your targets, wonderful. And if it doesn't, you've already taken something off multiple times. And I was all over this thing like white on rice today, so hammered it pretty good. Now, with all things being equal, it should deliver on this candle or the very next candle. And for those that are asking, why would I say something like that? You can see a small little separation between this candle's low, this candle's high. We went up in there once, twice, and we started the price run. So we went below this candle's opening right there. So these two up close candles together, I want to see price move away from that when it does that. If it doesn't, then I have to accept the fact that I may get stopped out. So I'm looking at it, I'm wondering, does it want to really accelerate down to this order block here, these two consecutive down close candles, the high to the opening? That would be a very sensitive price point for me because we have a fair value gap in the same area. But I'm leaving what I have here in terms of the orders If it can book those orders, that completes my week. Lots of manipulation here. That's one. See if we can get that final one here inside that fair value gap. Just stop and roll it down to the rejection block right there on this closed candle. So if it stops me there, I'm comfortable with that. I don't care. It's traded to the market maker sell model, sell side liquidity, which is the reason why I had that limit order there. And the 2 remaining contracts I have are being framed on the basis of that small little fair value gap there. So if it can deliver that, wonderful. If it doesn't, then it stops me out. That's just as well. And here we are. Just like it's coded. Just like it was explained in source code. So my friends, that is a $26,240 day. All over this thing. Right out of my lecture notes and mentorship. You can see that, all the fills. I'll take them all for you. As you can see, it's not market replay. And I'll toggle to ES. So it's not like I can go back and pull them up again once you change the screen. If you reset your account, all that stuff, it wouldn't be there. Okay, so again, that's $26,240 all on the ES. I'm sorry, on the NQ. Up and down. The macro, I'll teach you that this weekend on Sunday at 2 p.m. Enjoy your weekend. Until talk to you next time. Be safe.